Okay, the recording has been started. Welcome then to our today's session. Today we will carry on from where we left with our chapter 12. As I was mentioning that in the last session, then we've introduced the opening working process in our production. Just to make then the quick demonstration of then what, or a summary then of what then we've covered in our last session, to give you then an overview of then what we've looked at. So what we said that, and we said that when we look then at in our production, it happens that then this is then your first period then of your production. You started then from 0% and your target is 100%. So it may occur that if then your new products, let's say for argument's sake, we receive a raw 10,000 units at the beginning then of our production. So as we run our production, we find that with the conversion, we'll end up then now having a closing of 70%. At 70%, then I will have then, let's say that total of 2,000 units. So your completed units, you'll have then 8,000. That's your completed units. That's what then we've discussed. So this is going then to be your closing. We had no problem about that. And we come then to our second day or your second period, whatever then you call then your production period. Once again, then this is then your production line of that second day. But the difference now at 70%, we've got then 2,000 units. As we've mentioned, it's no longer a closing now because it's a second production period. Now it's going to be opening units. You receive another 10,000 raw units. So our argument was that now that we could see here that we've got two sets of units in our pipeline, which one are we going to start with? The one that's sitting at 70%, or are we going to start then with the ones that are sitting at 0%? Then we've agreed that then one company can decide then to firstly complete the one that are sitting at 70% and complete then the remaining 30%. And we give that a name and call that one is first in, first out. But one now argue again and said, how about then starting then with this 10,000 units that is sitting at 0 up until this 10,000 units also reaches then 70%. And we add then the 2,000 and we've got a total of 12,000 the time we say 71% onwards. We said that that is also accepted and we give it as a weighted average method. So then those are the two methods that we've talked about. If then it happens that you've got an opening and your closing working process and in your production line. So we've demonstrated that then by doing then some exercise, as you can see, this is one of them, the exercise that we've looked at then of showing you then how then to run our production if it happens that we've got the two sets of units and in our production line. So we will move on then with that. And look now to our today's session. And today's then we introduces then the losses in our production. So that's what we're going to talk about and today. But what if then we've gotten the losses while then also we've got this opening and closing working process? We also encountered then some losses and in our production period. So how are we going then to do our reporting? So that's what then we are going then to look at then in our today's session. I try then to make use of a different connection today. Hopeful then is a little bit faster than the one that I have been using. I don't want then to talk to a certain slide yet, then it's not appearing on your side. Right, then this is what then we're going to talk about today, reporting then for losses with work in process. So the term then with work in process simply means that with the closing working process, or in other words, with the units that are incomplete in the process. So the cost of normal loss units must be absorbed by the good units. So this is the repetition. We've already talked about this, that once you've got a normal loss in your production run, then we don't allocate any cost to those units that we've lost. So with the cost of those units, it's going to be absorbed by your good units. So this is what they are saying here. Then just to recap, if it happens that guys, we've got a total cost of 10,000, then to purchase 2,000 units. That's then your raw material. Then by the end of your production, we cannot change with 10,000 units, because if then this is the total cost price that you pay by the time you were purchasing then these units from your supplier. But now you no longer have the 2,000 units. I'm sorry, what am I doing now? In this case, instead of 2,000 units, you'll find that then you've got, let's say that let's say we lost 200, then we've got 1,800 units completed. So we cannot change then to 10,000 and say that let's then take away also a cost that is equal to 200 units. The only thing then that we're going to do now, when we work out our cost per unit, before we said then 10,000 divided by 2,000 units, and your cost per unit here then was 5 rand per unit. But here in this scenario, what we're going to do, we'll take 10,000, but then we divide it by 1,800. So you'll see then your cost per unit is going to increase a bit to 5 rand, then 56 if you want to do that round of thing. So that's how then we absorb the cost then of the normal loss unit. So probably then you still remember that then because we did talk then about this. So that's how then we will absorb then the cost of the normal loss units. Then secondly, then another important point is to determine the point at which the loss occur. So that's another thing then that they are talking about. What do that statement mean? Go back then again to your production line that we've talked then about. We've gotten the production line. So in this production line now we need to establish, okay, now that you say that you've got a loss, at what point then do we inspect then the loss? Then we divide then our production line into 3. So we've got then at this stage at 0%, and we said that that stage is at the beginning of our production process. Then again, you've got 1% up until 99%. So then at this stage, then we give it again another name and say that is your during the production process. And again, if the loss is inspected at 100%, so when we completed our production, then we say that, okay, our loss is being inspected at the end of your production process. So those are the 3 points then that we have then in our production. So either then we inspect our loss at the beginning, during the production process, or at the end of the production process. So then that's what then this statement means, and when we say that we determine the point at which the loss occur. Then we quickly then move, and they said next then a cost of lost units are only allocated to units reach the inspection point. Very interesting statement. So that's what then we do then when it comes then to the cost of the lost units. We only allocate then to the units that have reached their inspection point. So it means that you have then to look at your production line. So have your production line. We said then we've got beginning, and you've got your during stage and at the end. But you see when your mic is on, I'm not sure then if, okay, thank you. So with that production line then that we have, so we have then to establish, but if then we say that the loss occurs at the beginning, can you see where is there a problem? Thank you. Let's stay muted, colleagues. Then if then there's nothing then to say, but only if then we've got a question, that's where we can open up then our mics, please. So then these are the three stages. So if then the loss
I
occurs,
can't see screen. Sorry, sir, I can't see the screen.
is it? Good. But then on my side, then it shows and it's supposed then to appear. Probably then it's your network on your side. Is there anyone then who can see then what I'm sharing now?
Yes, sir.
Yes,
Okay. Yes. So what I was saying is then look, these are the three stages that we have then where we detected the loss. And they are saying cost of loss units are only allocated to units reach the inspection point. So if the loss then occurs at the beginning of our production process, what we need then to look at is the units that have passed then the 0%, which is mostly then all the units then that we have in the production process, they have passed then 0% because this is your starting point. In other words, it means that just before you start producing and say that 1% is completed then to these units, we first inspect then the loss. So then it means that our completed units, your closing working process, they are going then to take part in the share of normal loss cost, as well as your abnormal loss if then you've got the abnormal loss. Hence, they are saying that if losses occur at the completion stage, that is at the end of our production, costs for losses are not allocated to closing working process. Can you see then that statement? It says then it's not going to be allocated. Why? Because we said that losses are only allocated to the units that have reached the inspection point. And in this case, the inspection point is 100%. And it may happen that at 60%, that's where your closing working process is sitting at. So you cannot then share then the normal loss cost also to the closing working process because these units have not yet reached 100%. But if closing working process has reached the inspection point, costs are absorbed by completed units, closing working process, and abnormal loss units. Then this simply means that if our inspection point is 50%, we inspect then the loss here, and your closing working process is sitting at 60%. So that's the indication that we started at 0%, we took 10,000 units. So if then your closing units, and let's say it's 1,000 units. So we started here, then we took 10,000 units. By the time then we were at 50% with our production, the total units that we have, it was still 10,000 units because we only drop 1,000 units at 60%. So we've inspected then the loss out of 10,000 units. Hence, then we are saying that in this case, it means that also your closing working process is going then to take share then in the normal loss cost sharing because it has already passed the inspection point. I'm sure that now you are getting it, you are not, but when we do then the practical exercise, you'll be able then to understand then what we are talking about. But if you do understand it now, that's well and good. But if then you are not clear, but don't worry, then as we move on, as we go then to the practical exercise, we are going to re-explain again up until you've managed then to grasp it. So that's what then they mean when we talk then of then the loss. But we have then to do the demonstration of this when we do the actual exercise. So if you look at your textbook at 12.8, 12.9, and that 12.10 examples there, you are given some of the examples of these scenarios whereby then the loss is okay at the beginning, when it's okay then during the process, and when it is okay at the end of the process. We will try then to cover all those important, but when we look then at the end and during the process, because beginning and during the process, they are almost then the same. But then I will see then the change only if then it occurs at the end. So we will try then to look at the exercise that we have. So this is then the first exercise that we're going to tackle it. If then you are using then the third edition, then this exercise here is on page 319. It's 12.7 there on that page 319. So this is an exercise then that we are going to look at it. We said it's page 319, 12.7. Then the exercise then it reads, KPS Limited manufactures a single product in 3 steps process. So it means that we've got to process 1, process 2, and process 3. The company uses the weighted average method to value its inventory. So we're looking at that. We need then to know about which method then of valuing then the inventory. Material is added at the beginning of each process, and conversion cost incurred uniformly during each process. Detailed below is the process information of process 1 for the month of January. So this is process 1. Then that means then there's no need then to do then the previous process information, because then this is then the very first process. So we've got the opening working process sitting at 40% in respect of your conversion cost. Production entered during the production, then we've given 30,000. Closing working process sitting at 15% of conversion cost is 8,000 units. Then there's a cost of opening and your cost of during then the process. Losses then incurred in the process were 5,000 units, of which 40% was losses that were not expected during the manufacturing process. So this simply suggests that we've got 2 sets of losses here. We've got the normal loss as well as the abnormal loss. Losses occur at the beginning of each process. That's another thing that we're looking for. Okay, at what stage then we have to detect a loss? They are saying to us it occurs at the beginning of each process. So we are good then to go. Now let's see then how are we going to, let me wipe then out then this. Before then we can move on then to our first statement, which is quantity statement. It's going to be good, guys, then to firstly have then your production line, especially now that we've got these losses. I'll always advise you then to start then with the production line. So look at your opening balance. We've got the opening here, which is sitting at 40% when it comes to your conversion cost. So somewhere here, that is 40% of your production. You've got then this total units of 3,000. That's our opening. Then production entered product entered production during the month of January. That is the new units. If we can go and check here. Product entered production during January is 30,000 units. So that is at the beginning of the production process. We are given then 30,000 units. So you put that there now just on 0. That is then these are the new units. we are going to start then our production with this 30,000 units. And again, a closing working process, it's sitting at 15%. So somewhere here. So we've got then our closing of 8,000 units. So this is then your closing units that is given then to us. So they say that, well, you calculate then the loss on your own. Now let's also then take then into account then the loss. Go again then to the very last statement that is given here in this exercise. If you look at that last paragraph that talks then about the loss, they say that losses incurred in the process were 5,000 units, of which 40% was losses that were not expected during the manufacturing process. Losses occur at the beginning of each process. So that's very important information that we were looking for. So we've got a total units of 5,000. So the losses occur at the beginning of the production process. And we do know that we've got a total of 5,000 units. But we know that 40% then was not what we expected. So we have then to work out that, okay, we've got a total of 5,000 times under 40. So it means that we've got 2,000 units, which is your abnormal loss. So it means that 3,000 units is your normal loss to make then that total loss of 5,000 units. And then when did we lose then at these 5,000 units? Then they say right at the beginning of your production process. So simply means that we said then 1% completed, 2% completed with 30,000 units minus 5,000 units. So it simply means that now in this case, then your closing working process is going to take part then in the share of a normal loss. But your opening, because remember the opening units are from the previous production process, so they were already then they have already taken part then in the share of then the loss in the previous production process. This process, they are free then from the loss because their starting point is 40%, is not 0%. So you need then to look at the units that you are going to start with at 0%. And the method that we're using here is weighted average method. So it means that the 40% units, the 3,000 units is going to wait for 30,000, which is going to be 30,000 minus 5,000. Then you move on at 15%, then you drop 8,000. And this 8,000 was part then of your units at 0%. So it means in this case, you are going to share your normal loss then to completed units and your closing working process. That's what it means. But we need also then to establish, okay, now how many units we have then in our completed units will be how many units. What we're saying here now, we say that we've got 30,000 units that we started with the production. Let's take out then the normal loss of 5,000. That left us then with 25,000. We started our production. Look at 15%, what happened? At 15%, again, we said that we can carry on with 8,000 units. So we carry on, then we said 16%, 17, 18 onwards with how many units? 17,000 units. Do you agree then with me? I hope so. Then up until we reach 40% in our production. And at 40%, we find out, okay, we've got an opening here of 3,000. So we add then another 3,000 units. So it means that your completed units is 20,000 units. Are we still together? Is still clear then so far?
Sorry, sir.
Yes.
No, sir. No.
Somehow I'm lost here.
Me too.
You said we have 30,000 units here.
Yes.
Then on these 30,000 units, we have to subtract 5,000 units, which is a loss.
That's correct.
Then at the end, aren't we supposed to have 25 units?
Yes, we
25,000
left
units.
25,000.
So here completed is 20,000. How come?
Okay, you've got it then where we said that we're left with 25,000. And at that point, then we're still at 0% with our production. Then we started our production and say 1%, 2%, 5%, 10%, 15%. Check at 50%. What happened at 15%? When our production process was at 15%, what did we say then in our production? We said that then we cannot carry on now with 8,000 units. So 8,000 units, yes, I'm sure at 15% out of that 25,000. So say 25,000 minus 8,000. You left with how many units?
17,000.
17,000. Yes, that means then we say 16% in our production, 17, 20, 25% completed with how many units? 17,000 units. Then up until we reach 40%. And at 40%, then we said, okay, at 40%, there is your opening because of the method that you are using. So you have to merge now, you have to combine the new units with the opening. And because of these activities that happens and with your new units, it's no longer 30,000 units because you've lost 5,000, you've got a closing, then that you've left it at 15%, you've got only 17,000 in your hand. You add then the 3,000 units, that is your opening. That gives you how many units?
20,000 units.
20,000 units. Is that clear now?
Thank you, sir.
Yes, thank you. Then after 40%, then we just run now with our production because then there's no other activity now. We've already then now taken into account the losses. We've already dropped in also then our closing working process. Then we simply add the opening and we just push then the production up to 100%. That is why we are saying that now at 100%, we've got to 20,000 units. Right now that then we've done then now the timeline and we've got a clear understanding of what happened in our production. Let's just do then our report. We start then with the quantity. We've got then the input, the details, output. Then we move on then to the equivalent units, which is going to be made then by our direct material and your conversion. Now look what I'm doing. Now I want to say conversion cost and your conversion units. You can have cost and in a quantity statement, guys, and because the word quantity, it means then a quantity. It means then your units, and there must be no cost there at all. And remember then to have then that small column for the percentage, because it's very important then to indicate. So in this case, then we do have then the opening. So opening units. Our opening units then is 3,000 units. Put them on your input side. Then your units introduced then in your production 30,000. that gives you a total of 33,000 units. To make then your life easy, you can just put then that, I think I'm going to need more space here. Yes, sorry for that. Let me just expand this. Okay, completed. Normal loss. Yeah. Total of 33,000. Just send to safeguard then yourselves and to put yourself on a safe side. Put in that total again also in your output to know that by whatever activity that you are going to do, then you are going to work out towards then that total. So the first thing that we look at is the completed units and transferred. We've already then now established that it's 20,000 units. So it's going to be 20,000 everywhere because everything there is there at 100%. So those are going to be your free marks. But if you look at this exercise, this completed units of 20,000 was not given then for you. You have to calculate it on your own. So sometimes then you can make mistakes. So we put in then the losses. We start then with normal loss. So we've got a normal loss. We've calculated already 3,000 units. Then because then the AC 101 said that we do not allocate then any cost then to normal loss, or the cost of normal loss is going then to be absorbed then by the good units. That's what then they are saying. So at this stage then the loss occurs at the beginning of our production process. So that simply means that then there's nothing then that we are going to allocate to our material column. Then for those units, because the loss occurs at the beginning. Then also then the conversion, there was nothing then that was converted because it was still at the beginning of then our production process. Then we come then to abnormal loss. We've got then 2,000 units and of then your abnormal loss. Now we come then to then your direct material, because then your direct material was allocated right at the beginning of the production, because they say that the material, if you look at, there's a statement that talks about the material here. If you can check here about material is added at the beginning of the production process. Then because then of that statement, therefore, unfortunately, then for our direct material is going then to be affected by the normal loss, because all the material that we need then for our production was allocated at the beginning of then the production process. It's going to be 100%. Sorry for that. I think there was something that was trying then to disconnect me, but I think I'm back now. My network might be a little bit bad, but I think it's fine now. So the 100% of 2,000, it will be 2,000. Now coming to the conversion, because then the loss was inspected at the beginning, it means that your conversion converted what percentage at that time? 0%. So it means that it's going to be 0. So that's what we are going to record. Then we've got a closing working process. And we've already know that our closing working process is 8,000. And we do know that now that we've got this closing working process of 8,000, it's not because of the material, because all the material that we need in our production was added at the beginning. So we'll record 100% for the direct material. So it's only the conversion that converted only 15%. So we are going to calculate that 15% of 8,000, which is going to be represented by 1,200 units. So that's how then we are going to show your quantity statement. Then now it in the output column, then I will have then our 33,000. Coming to the direct material. It will be 30,000. Then our conversion, 20,000 plus your 1,200, it will be your 21,200. So these are your total equivalent units that you are going to have then in total. That's what then you are going to have. Then we move on then to the cost statement. Then in our cost statement, we look at we'll have then our total equivalent units and cost per unit. We've got then the direct material and your conversion cost. Remember, because then this is then a weighted average method. So it means then we are going to also then average then our cost. We're going to match then the cost. So your cost of your opening, we are going then to combine it then with the cost of the current production. So that's how then we are going to do. Let's look then at our cost. So you've got 20,000. That is your opening plus then 100,000. Then that gives you 120,000. Say opening is 20,000 plus 100,000. That gives you a total of 120,000. Coming then to the conversion, you've got 50,000 and 200,000. Then it will give a total of 250,000. Then the total will be 370,000. And we need then our equivalent units from then this calculation. Then our equivalent units is 30,000 and 21,200. 21,200. So 120,000, then we divide it by 30,000. So it gives you 4 rands. If you look at this, guys, then automatically, then this simply means then we've already absorbed then the cost of in normal loss then to these units. Because then on this 30,000, you've got your good units and your closing, as well as your abnormal loss. 250,000, and you divide it by 21,200, and it gives you your 11 rands 79. Then we can add to that then 4 rands. Then your total cost then is 15 and 79. So that's how then it's going to look like. And the last one will be your allocation statement. Once again, remember we said that when we do the allocation statement, we are being guided by the output column of the quantity schedule. So the first units that you have there is 20,000. So which is completed units, and we know that everything is there at 100%. So we started with those units. Completed units. We've got 20,000 units times another cost, which is the total of 15 rand 79. We don't have a problem with that. Times 20,000. So it gives us a total of 315,849.6 cents, something like that. Then the next units, when you go then back to the output column, next units that you have there is going to be 3,000, which is a normal loss. And remember what we know about the normal loss, we do not allocate any costs to the normal loss. So we skip those units. Take the next one, which is abnormal loss. We've got 2,000 and in the direct material. So there's only the direct material that is being affected by the normal loss. So we are going to allocate the cost only to that direct material. Abnormal loss of 2,000 units. So we say direct material is 2,000 units times 4 rands. If you've got time, you can write also